Guys, thank you very much for joining today's call. You know, this is part of the life. We are very natural, authentic. We are not trying here to build that we are perfect people. We also have a lot of technical problems and so on. But our objective is to deliver to you a good information and knowledge I have accumulated over the last years. And for you, which don't know me personally, who I am, I'm a lawyer and accountant. I have actually two professions, let's say two diplomas. And in the last 25 years, I did nothing. I just did consulting and investment in real estate. Investment, it means passive investment. I did not participate very actively because, you know, we are freelancers. We are not allowed to do too much business. We are allowed only to make passive investments in real estate and forget about this and make money while you sleep as a freelancer. So, and you know what? During these years, I accumulated so much knowledge that sometimes my head is like exploding. I don't know to whom I need to give this information to help other people to not stay poor and believe in what other people tell them to do. Because, you know, we grew up in different families and we have also our fears. We are afraid of making a decision. We are afraid of going live. Look, now we have like 1, 2, 3, 4 cameras behind in front of me, and I don't care too much what people think about me because I know who I am, okay? So this was the small introduction. Now, today's topic is about club deal, how to invest with family members, with friends, with people you know personally in different projects, not just real estate. You can invest in different portfolio projects in different countries, depending on the risk. And I will explain you in very simple language. I will forget today that I'm a lawyer and I will not use this difficult terminology of, I don't know, squeezing out, lock-in, LOI, which you don't know maybe what this means, and you should not know because if you step too deep in this terminology, you will not invest in anything. So I will relate to you guys today. I will ask you to ask as many questions you can ask because I'm here to help you. One small disclaimer, today's webinar is not about financial advice or legal advice, or it has only educational purpose. So I'm here to help you understand from my experience how you can make money, but this is not professional advice. And of course, I'm not inviting you to invest in anything. You decide in what to invest according to what I will deliver today to you, okay? Is this clear? Guys, let's make an arrangement. We may have interactive discussion, so don't wait like by the end of the webinar and then ask questions. Stop me anytime when it's not clear and say, hey, Igor, I have a question. It's not clear. Challenge me. Ask any question you want. And if you don't like what I'm saying here, I will take the messages from our comments. We had different comments. So guys, let me come to this magic board. So I would like to begin with the following statement. Why do you think banks is a resonance. Why do you think banks make more money than you? It's very simple. It's very simple because your parents and everyone, when they make some money, when they receive a salary, the only secure and say easy way to get rid of the money, they take the money and bring in the bank, right? So they take the money they saved for years and they bring and put in the bank. What the bank is doing? The bank is paying you in Germany, for example, is maximum 1% per year. In some countries with different inflation, interest rates might be up to, 3-4% per year. But this is nothing because your money, your equity should bring other money, So the money you have saved for the years, you need to mix them with other people's money, get a better leverage, and make more money on it. I will begin with the comments I had in the social media, and people say, no, it's impossible. It's practically impossible, because it was a Russian guy, to make like 400 euro per month, like a salary, from your investment of 10,000, right? So let's make this challenge. Is it possible to invest only 10,000 euro, yeah, and make 400 euro per month? Mehedi, what do you think? It's possible or not?
Yes, but probably with high risk.
With high risk?
I mean, it's a huge return.
Yeah, it's a huge return, yeah. Guys, give me a phone, I'll need a calculator. Because we are living in AI era, we need calculators. So, when you are coming to this kind of topic, yeah, to invest money, Anya is right. You need to identify the risk, yeah, because there is risk always. You need to identify the risk and make sure you mitigate this risk. But before mitigating, you need to put a price on it, okay? So every project has risk, but if you have good lawyers on the side, they will explain you how to mitigate this risk with legal instruments, okay? So now, I'm speaking today about family members, okay? I'll change the page. Yeah, let's assume how many, this is locked. Let's assume, guys, you are a class of 30 people, yeah? Everyone is investing. So now in this call we are 33. Let's say for ease of calculation, we'll say 30, okay? Imagine we are 30 person willing to pull money together and invest in a real estate portfolio, yeah? Hisham, what do you think? By the way, in UAE, it's possible to register 30 people in a DLD title or not?
Yes, you can register 30 people in a transaction, and you can also incorporate a company, and that company is owned by 30 people, which acquires the property.
Perfect. So there are two ways, right? So it depends which country, of course, but first, so let's say
Mr. Pupupa, you are also mute.
I'm mute also. Yes, sorry, thank you, Mehdi. In a club deal, you have many ways. Point number one, you can have a company, which we lawyers call the special purpose vehicle. You have securities in this company, or shares, call them as you want, and 30 people, they may become shareholders in this company, okay? Another option, you get registered through a GV agreement of these 30 people, okay? So, at least two ways you have to come together, pull the money from everyone. Once again, let's say everyone is pulling 10,000 euro, okay? So, and you have 300K here and here. Now, if you invest just this money, you are not benefiting from the leverage effect and from the price, which is much less, from the price of the money, from other people you attract. And now I'll explain why always your pocket money have a higher cost than the money you get from other people. So I will challenge you, Hisham. What is the price of your money? Let's say I want 10,000 euro from you. What you'll say me, Igor, I will give you this money to invest under one condition. The price of my money is so much. So how much is the price of your money?
So what do you mean by price?
Yeah, this is the trick, because when you attract money from people, they will give you this money in simple words, let's say, for interest, right? The bank is giving for an interest. Yeah. Yes, exactly. So the bank will give me this money for nowadays like 3-4% per year, right? So the question is, how I need to pay you back to buy your money, to pay for the money I use from you? How much?
I mean, as an investor, anybody would like an ROI that's 20-25%.
Okay, so you are a very clever guy. You know the price of your money, and I think it depends on the risk. And if you are looking for such a big return, this is good. But now coming back, so you'll never. So it makes no sense for you to invest your money, which is 10,000 euro, okay, and you receive the same 20%, which is the opportunity cost of capital, right? So I'll repeat once again just to understand. It's a little bit complicated. I say that the price of money is equal to the potential return on investment you get from your money, right? So now, if I will come to you and ask, give me your money, you'll not give it less than 20%, because this is your wish of the reward on risk and so on, right? So now, if you want to invest with other people money, okay, you will always make sure you find a cheaper price of the money. And where is the cheaper price of the money? Which place you have the cheaper place of the money? So banks and maybe passive investors, mezzanine funds, private equity firms, which they are comfortable maybe with 10% per year, right? So once again, explaining this, we come to the conclusion. It makes no sense to invest your own money, because you are giving the opportunity from your pocket and you invest in something which you have stress, you have to deal with it, you need to manage, you need to, I don't know, make invoices, papers, so on. And by the end of the day, you have the same 20% which you will receive from an investment. So, right? Therefore, you look for cheaper money. So how you do this? If you have 300,000 euro as equity, you always multiply with a general factor 4. Why 4? Because this is the average banks finance such deals in real estate. Now, guys, I'm speaking about real estate, which I believe is the safest kind of investment. And nowadays, what's happening with the gold and everything, I think this is the gold, real estate. And not emotional real estate, but real estate which is bringing money, okay? So now, if we invest with the bank, what is the leverage? So 300 multiplied with 4, you have 1.2 million, right? Do you follow me? I'm right? Okay. So now, you attracted from the bank how much? 2 million minus 300, how much remains?
900.
Right. So you got a debt. It's called loan of 900,000. Okay? So this money you attracted from the bank, right? Now, you need to pay a price for it. What is the price of this money, Hisham, nowadays in your country?
Around 4 to 5%.
4 to 5%.
Yearly.
Yes. I would say if you negotiate well with the bank and you show them that the risks are mitigated with good agreements in place.
Igor, I liked my feminine voice, whoever commented on my behalf.
Okay, no problem. It's okay. So, Anya said 4 or 5. Let's say 4%. So this is the 4% is the cost of debt. So this is the price. I will explain you how we in financial world we use this. You say cost of debt. Let me disconnect someone. Cost of debt. See, this is but in simple word, this will be the price. So this is the price you pay on this 900, right? This is the loan you attract. Okay? So up to here is clear? Mehdi, did you understand on your side?
Yeah, I understand it.
Okay, perfect. So now I will move forward to have more place. So we're coming with the following situation. We have equity, 300K. We have debt, 900K. We have the total investment, 1.2 million, right? Did I miss something now? No. Okay. So these are our figures. Now, for every kind of, let's say, source of money, we need to calculate some KPIs. In simple language, this is called how much return we have back from the investment. Okay. We discussed about cost of equity. We discussed about cost of debt. Okay, remember, cost of equity, Isham told me 20%. Cost of debt, Anya told 4%. So, and now we need to calculate ROI. What is ROI? ROI is the return on the overall investment. We invested in the property, yeah? And when I'm speaking about property, I'm speaking about multifamily buildings with multifamily units. And I would prefer to have like 1 bedroom, maximum 2 bedroom apartments in a building. And let's assume we found this building, which has the price of 1.2 million, okay? And we have an ROI, let's relate to this market. Hisham, what do you think? Which ROI we'll have if these 30 people are in the call decide to invest with you? Is the same 20%?
No, 20% is going to be far-fetched. I mean, in terms of an ROI, realistically, it'll be anything between 8 to 11%.
8, 11, okay.
Yeah.
Let's say 15, if you allow me. Is this realistic? Because we had, so once again, guys, we don't accept investments, like we presume we don't accept investments which are not performing well. So we need to target like a 15%, because if the investment is not performing well, we get rid of it. So we just sell. I have so many friends, they have apartments, houses, villas, cars. I'm asking them, I also did the same mistake. I'm asking them, hey, how much money you make on it? Yeah, we make some money, it's enough for living. When I do the calculation, they make 3-4% per year. And here's the mistake. Because nowadays, you need to, why 15%? You need to look at the objective criteria of the market. And you don't accept anything below. Because you'll find, for example, apartments, which I also had different situations, asking the landlords, hey, why you are holding this investment? You are struggling, you are working like a horse every day, and you are, let me disconnect someone. Okay. And you don't have enough cash flow to survive, you are working all the time, because your investments are not performing. It's very simple. So that's why the target should be always 15. Yeah. It depends, of course, on the market, on the risk, on the inflation, and many, many factors, which later I'll explain you how this need to be discounted. And there are a lot of very clever formulas and private equity firms are using, like weighted average cost of capital or internal rate of return or NPV and so on. I will not explain you about this because this is very complicated. I will try to relate to your understandings, okay? That's why 15 is our target, okay? But I like Isham, you see, his money costs 20%, but in the market it's 15. Bravo. Okay, so now.
I gotta make it challenging for you.
Please. At this stage or later? You mean this cost of equity? Yeah, okay. So now, we need to find out how much money we make on our money. Remember, this is our equity. Just imagine, Mehedi signed a joint venture agreement with all these 34 people already, okay? And they agreed to co-invest together in a building with, let's say, by the way, can you divide 1.2 million by, let's say one apartment costs 200,000 euro? Because we take one bedroom. How much will be this? It's 6, it's easy, okay. So imagine a building, I will make it the building, yeah? With 6 apartments. It's ugly building, I know, but you don't, so guys, don't focus with your heart on business. This is the biggest mistake. There are 2 types of investor, emotional and financial, strategical. If you're a financial investor, don't look at this building like, you know, a woman is walking inside and say, wow, I love it, oh, I don't care. If the figures are good, are providing 15%, and it's ugly building, but it's sustainable over the years, this will make you rich. And then from the cash flow you get from this building, you can buy some emotional investments like a villa or a penthouse, okay? So now, imagine this building. How much will be 1.2 multiplied with 15? How much will be this per year?
180,000.
Say again?
180,000 per year.
Okay.
Sorry, Igor, you said 1.2 million?
1.2 million divided by, multiply with 15% per annum, yes.
Yeah, it's 180,000.
180,000, okay. It means this is our yearly cash flow. Guys, please correct me if I'm wrong, okay?
But how do you plan to obtain the 15% from our building?
Yeah, once again, we focus only on assets which perform. So another mistake which many investors made, and I also made in the past, is that we accept to invest in buildings which they don't perform, they don't generate 15% per year. It's very easy.
But it's supposed to like give you 15% from rent yearly?
Yes, it's supposed.
But where does that exist?
A lot. So first of all, how we calculate this 15%? In 15% you have rental income, you have capital appreciation, okay? And you have maybe some additional services you provide from this building, beginning with laundry services, renting of bicycles, and so on. We are not speaking about one apartment. You need to have at least 6, 8, 10 apartments to do this kind of business, okay? But if we buy...
We cannot count the capital appreciation in cash flow because it's not really a cash flow. It's maybe eventually one day when you sell it, you get the...
I will explain this, yes. I will explain this. So, when we speak in general about return on investment, we always count for all stream of incomes. When we are speaking about internal rate of return, we count every kind of income, also appreciation and depreciation from the tax point of view, because in some countries you can have also capital depreciation, which you offset against taxes, right? So that's why you use IRR. This is a different formula. If you want, I can explain later. But let's presume now that we have 15%, okay? Let's presume this is our cash flow. Now, you divide this by the total investment. How much it is?
1.2 million, no?
Yes. Are we coming to the same figure or not? Just a verification.
One second.
So the next step we are doing, we need to extract from this amount the interest rate and the cost of debt we pay to the bank. How much was the debt? 900?
900K.
Perfect, okay. So how much you need to pay to the bank this 4%? Anna, how much is this? 36?
36,000.
36, perfect. Now, how we make sure that we calculate correctly the return on equity we have on our investment. So how do you calculate return on equity? We take the overall amount which we received, from the investment. We subtract the cost of debt, which is 36, and we come up how much it is.
144K.
Okay. Are you with me, guys?
Yes.
Do you agree with this statement?
Yes.
Okay.
For now.
Yes. I believe Anya is skeptical. Anya, did we make any mistakes?
No, it's all correct. If we take the fact that it's 15%, but I'm still doubting that.
I'm not allowed to promote any investment now here. But even if you drop us a message, maybe we'll show you exact presentations how you can make this. But even with 10%, we come with better result than using our own equity. Okay. I'm making this assumption of 15% only for the one simple reason. I don't want people to accept anything below 15. Because you need to always think about this 15 is not a netto. Guys, you need to also discount a lot of things. And if you accept an investment with 10 and then discount this and this and this, maybe it makes no sense to invest at all.
But Igor, in which markets can you achieve that 15%? Because that to me is also like questionable.
I agree with you. You can achieve this 15%. You can achieve this 15% in a lot of countries. You know, people, I would say directly, they're lazy. They're lazy. They just accept, they go to a market, they meet the first real estate broker, and they like real estate broker because it's good looking, and they make an emotional investment. And when they come to the real estate projects, they look at, I don't know, walls, colors, what my colleague said about this. Yeah, because my friend also bought here. I also have to have in Port La Mer, for example, or I want to have there and there. But they don't look at numbers. They don't.
But Igor, sorry, I just to interrupt you. Like, I think 15% would be more achievable, you know, in emerging markets, not developed markets.
Yeah, maybe.
Yeah.
Maybe it depends.
So
In
Dubai,
Europe,
for example,
if you
would
get
be
like 4 to 5%, you're
sorry.
lucky.
Yes, it depends on the country. I agree with you. It depends on the country. But me personally, I will not accept anything which is below 10%. Okay? So let me finish this statement and I will come back to you guys with the other explanations, okay? So now we have 144. What is this? This is return on equity. It's very simple. Okay. So let's divide this by what is the equity?
So
300, right?
the equity you started with this was 300, yeah.
Yes. How much it is now? How much is in percentage? Just divide 144 by 300. And now I will make, let's say this is a pessimistic scenario, right? Hisham told me that 10% is realistic, okay? So let's make the scenarios 10%. You have ROI 10%.
Yeah.
Okay? Yeah. You have the cost of debt 4%. Okay? So how much is ROE? Coming back. So we have only 120,000, right? So 120K. We extract the cost of debt, how much it is? 36K, right? How much remained?
Sorry, you changed to 10%, right?
Yes. From 1.2 million, we make only 120,000.
Yes. All right, cool. Okay.
Yeah. And now we extract from 120 the cost of debt. How much it is?
So 120 minus 36, right?
Yeah. How much it is?
84K
84. Okay.
euros.
And now divide this by 300K.
Okay. 84 divided. Is 0.28
Is
fine, right?
200, how much? No. 84,000 divided by 300. Yeah, multiply with 100 now. No.
Okay.
280. Okay. No, you did something wrong. So 84,000 divided by 300,000.
84,000
Divided by 300,000. Yeah.
divided by 300,000. No,
Yes.
Sure. It's with the
Yes. So multiply with 100.
28%.
Yes. Exactly. Now divide this. Divide this by 12 months. Yes.
84K divided by 12 is 7,000 euros per month.
Yes. And now divide this by 30.
Multiply, you mean?
No, divide by 30.
Divide by 30.
Yes.
So it's 233 euros per day.
Per month. Per month.
But you said divide by 30.
30 people.
Oh, sorry. Yeah.
So, guys, let's say we have, this is the, so previous scenario, Anna, you got it, yeah? In the previous scenario, we had ROI 144, okay? So 144,000 divide by 300, how much it is? 144 by 300.
144 divided by 300.
Without zero, just, yeah.
1 second. It's 48%.
48, right? Okay. So 48, and here we have 28. Okay. Guys, now I'll explain you what is the stress scenario you need to do for every investment. The same method is applied by European Central Bank. My thesis, my personal thesis when I finished banking and finance, my thesis was about ECB stress assessment of the European banking system. And in simple wording, you just need to stress your investment in two scenarios. Scenario number one is optimistic, yeah? And scenario number two is pessimistic. And as Hisham challenged this, and he said, yeah, okay, we'll get maximum 10% per year, okay, we're getting 18, right? Or how much? 28? No, 28. Yeah. So 28 per year. In the pessimistic scenario, 28. In the optimistic,
48.
48. Okay. If we do this in the mathematical x and y, always you have a competitive advantage because one investment may be here, another might be here, another here, if you have especially different countries, different portfolio. But you always have a competitive advantage, which is 28 plus 48 divided by 2. How much it is?
The average union.
Yeah.
28
Yeah.
plus 48
Divided by 2.
by 2, it's 38.
Hisham, what do you think?
Impressive, but to be honest, I can't really see the screen very well.
You can't see the screen. Okay. So then I will explain you simply. We did two scenarios. Scenario number 1, you have ROI of 10% per year, okay, which is realistic, you say, and we've got return on equity 28%. And we did this scenario pessimistic, so optimistic, and we have 48% per year, okay, in the case when you have ROI 15%. Are you with me? So, Anne, did you understand this? Mehdi, did you understand also?
Sorry, I was muted. So yes, but I still don't understand how is the pessimistic one so high.
You don't understand how pessimistic is so high. Let's check it once again.
This part I didn't get. How come optimistic is 48 and the pessimistic is, I don't see the screen now, but like 30-something%.
Okay, just take a pen on the paper.
No. Okay. I understand now. It was for the yes.
You understood, yeah?
Previous calculation. I understand now.
Yes.
Sorry.
So, guys, I will explain you the following. What we discussed today is not a fantasy, is not a theory from the books. You know, my garage is full of books, but I'm telling you from my personal experience. I've did this in my life many times. I'm doing also this now. And this is doable. But please remember, there are many, let's say, details you need to be aware of. So don't make any investments before you have an advisor on your side, because what we are doing today is just for educational purposes. And if you'd like, we can speak separately about which kind of joint venture agreements, which kind of risk are involved, how to negotiate with the bank. There is a special webinar which we'll do, by the way, in negotiation, because also banks, when you go to a bank, you need to imply and use at least 3 rules. The rule number 1, don't use one-door bank syndrome. Everybody's doing this. Okay, I'll go to my bank. If they refuse, I give up on my idea. No, this is the biggest mistake. You need to approach 400 banks. This is the first. Second, never allow a bank to take personal guarantee over the investments you make. This is also another mistake which many are accepting, this over guarantee. Bank is coming to you, you are giving them good deal, good cash flow, good location, and they say, no, I want to make liable through personal guarantee you, your father, your mother, your kids, and your husband. So don't allow this kind of approaches. And number 3, always do the homework before you go to the bank. Because many, they just got an offer from the real estate broker and they go to the bank. No, you need to go there and speak in their language. Show them these returns. Explain that this is doable. And also go with a good asset, because if you go with an asset which is, above the market value with 20%, the bank will never accept these deals because they also want to make money. So now, coming back. So I proved to you this is possible. Now, 38% from 300,000, how much it is?
300
Yeah.
times 38%, right?
Yes. So from, they don't stay, guys, because they are looking at me like that.
114k
Okay, divide by 12.
divided by 2.
Yes.
9.5k.
No, 9.
9,500
Okay, divide by 30.
divided by 30.
Yes.
316 euros.
Okay. So,
0.6.
okay, now do the following. How much it was in the optimistic scenario? Okay, in the optimistic we had, remember, in the optimistic we had 180. Please divide, no, 144. Divide 144.
140.
Guys, everything we're talking now is recorded. You can scroll back and read it carefully, okay?
144
Yeah.
divided by what?
By 300,000. No, by 12 months.
12 months.
Yes, and by 30.
And divide by 30.
Bravo, bravo, you are in the deal.
No, sorry, can you do it again?
So 144,000. Oh, guy, we have the bad assistant here. We are disinforming people. 144 divide.
400. Optimistic is 400 euros per
No, divide 144 by
12
and by
by
30.
30.
Yes,
400.
400. Okay.
Yes, 400.
So, guys, I will put this on the table once again. So 144k divided, or let's make it simple, yeah, like in the school, divided by 12 months, yeah, is a result. How much?
12.
Okay,
44 divided by 12 is 12.
okay. So, guys, I don't trust you. I don't want to miswarn people. Look,
Wow.
144
120,000.
divided by 12, yeah, and divided by 30 equal. So I'm showing you this, yeah? And you see this? So 400 euro.
This
This-
is for optimistic, right?
Yes, this is for optimistic. We'll come back to this. So I can be sure about this, that everyone having in the pocket just 10,000 euro, having good agreements in place, having the right asset also, bravo, they can make a salary of 400 euro. Guys, how many of you, Mehdi, can you please connect, because I know your story. How many of you, they're spending, guys, just listen to this carefully. They're spending 10,000 euro, 10,000 euro they're spending, either to move to another country,
That's true.
or to, I don't know, pay some fees for some online university which they teach us a lot of money. I saw some guys, they pay 10,000 euro for one ticket, VIP ticket in some conferences, teaching money. But you can, with this 10,000, you can make you a salary of 400 euro per month, and you don't need to go anywhere.
Yeah.
Am I right?
Yeah, and they have to hard work. That's true.
Yeah. And I also saw the comments in
Because of they don't have any financial knowledge. Why?
yes.
Yeah, where they have to make the investment.
Yeah.
They don't have any idea.
Yes. And
Igor,
Please.
sorry. I'm gonna have to excuse myself. I know I did not give much of input into like Dubai or the UAE's real estate market because it came at short notice. I've got
problem.
other commitments, but hopefully the next seminar will be more prepared and I can engage with your audience better.
please,
If
no
anybody has
problem.
any questions on the UAE's market, please leave them and I'll address it with Igor.
Sure.
Thank you very
Sure.
much.
Sure. Thank you, Hisham, for your participation. So,
Thank you.
guys, once again, you don't need to spend the money you have. You need to invest them, first of all. Second, you don't need to save them because money needs to bring money. And they just proved today how you can make 400. Let's say if you challenge and we say pessimistic scenario, you still make 316 euro per month. Okay? Now,
But this is if we like take into consideration that the market is always like for the next 15, 20 years, I don't know for how long are those loans, that it's gonna perform the same way. And like that's the risk we're taking because you see what happened in the UAE market. I mean, now it's not even that bad, but if this
Yes.
continues, maybe in a year or two, it will like, we will go from 15%
Yes.
to barely like covering the,
yes,
the
yes.
debt. So, yeah.
So we are having some assumptions. Assumption number one, we don't have war. Assumption number two, we are in a, not in a perfect, but in a moderate capital market. Why I'm saying capital market? Because anything you see, interest rates, return on investments, inflation, all depends on capital market. If you want to deep dive in capital market structure and how they establish rates and print money and generate inflation, we can do it. But this will be for the next webinars. Now we want to achieve this first objective to show people how they can invest their own money. But Anna is right. It depends. It depends on the market. It depends on the fluctuations in the market. But even so, did you know that there are some instruments, legal instruments, how you can protect yourself? For example, let's say a market which you rent your properties, you get cash flow in local currency. But you live like in a European country, I don't know, in Germany, Serbia, and you need this euro. So how you hedge, how you protect yourself against these foreign exchange fluctuations? It's very easy. You buy futures, swaps, and they're not so, it depends on the market, but sometimes, and you also discount them in the return on investment you make, you know. But once again, I will not go too deep into these details because they're a little bit complicated.
I have a question though.
Please.
So let's say I'm an emotional investor and
Yeah.
I'm invested in a building and then I see, okay, the real estate agent maybe lied to me and told me it's 15%,
Yes.
where in actual fact it's 8% and the occupancy is also going down.
Yeah, yeah.
How do I exit from this?
Yeah, very good question. So before doing any investment, you need to have an exit plan in your head. So what is your objective in this investment? Are you going to keep it forever, for life, perpetual, or you want to exit? And I would say that in some properties, especially in off-plan properties where the capital gain is very high, you need to have a strategy in your head how to exit exactly at the moment of handover, okay? And if you don't exit on time at the price you want, then you may lose money because, you know, let me explain it in the following structure. You need to think in the following way. We don't live forever. We are not living 100,000 years. The average is maybe, I don't know, 70, 80. It depends what will happen in the future with the war and so on. But time to maturity, so time to maturity is very important for your money. So these are, let's say, periods, yeah? These are periods, either months or years. Let's say we have here, I don't know, let's say 5 years, yeah? Or more relevant, how much is the handover process of a building, like 2-4 years? 3 years, okay, let's say 36 months, yeah? Okay, 36. This is the time to maturity. This is the period where your money needs to perform. And here you have money, yeah, let's say 10, 20, 50, 100, okay? So when you grow, when your investment is performing, you need to always have like this diagram, yeah? Now, what's happening with the off-plan investments? With the off-plan investments is like this. You have a huge risk in the beginning, yeah? And after the handover, here is handover. The risk is falling down. When the risk is falling down, the reward should increase. When the risk is increasing, the reward should also increase, because reward and risk, they go with everyone together. Okay? So now, if you ask me about exit, you need to, first of all, if you have a good investment, yeah, during this risk, which is a huge risk until the handover of the property, look, your risk is a lot, okay? Let's say here is like, I don't know, 2 years, and they hand over something here, okay? So you need to think to exit, not here, okay? Because the risk is beginning to fall down and you lose. You need to make a strategy where the risk and reward have a better profile, which means sometimes you will see the risk is going down, rewards still remain the same, you know? And this is the right moment of exiting. Because if you're exiting too early, you lost this opportunity. If it's here, you lose here is the right time. Okay?
Basically, when the risk and the reward are somewhat
Yes.
the same level.
Yes, exactly. Yes,
So
yes.
they're at that intersection now.
Yes, yes, yes.
Okay. But then let's.
Okay, you're clear, right?
Yeah, very good.
So guys, we have so many attendees, but we had like a few questions, no worries. We do this every Friday. Next Friday will be much more interesting because we will be speaking exactly how you draft agreements. Guys, one advice for me personally, not like a lawyer. Don't do agreements in ChatGPT and sign with your partners. This is the biggest mistake you can do. Nowadays, you can generate agreements easily, but if you make them in ChatGPT and you sign, ChatGPT is made in such a way that he will always try to please you, but he will not save you from all the risks involved, okay? So, are there any other questions? No. Some people left already. We are boring. Okay, guys.
Thank you so much for this.
Thank you, Aina, for participation.
We are not boring. We are enjoying Friday.
Say again?
Yeah, we are not feeling boring. We can like learn lots of things from you. You know.
Thank you very much.
Like last Friday, we didn't join like meeting. I was sending message. This Fridays the meeting will be not on yes or not. So we are waiting every Friday for you. But
No
the
problem.
problem is like the time.
Yes.
In every Friday, all the Muslims are going to pray at this time. You know. So
Okay.
if the time is if it's possible to make 1 hour later, it will be easy
Okay.
to join for it.
I understood.
You know.
I understood. My team will get this into account.
Yeah.
Okay, guys. Thank you very much for your
Yeah,
participation.
and,
Yeah.
And like,
Tell me.
okay, thank you so much.
No, it's okay. Hey, please go ahead. Sorry. Go ahead.
Actually, after complete the second session, I am trying to visit some places for real estate shopping.
Yes.
And then what can I learn from that session? And the reality is impressed me.
Yes.
Like before doing the session, I have zero knowledge about this sector.
You are trying to shopping
when
for
I
real estates now?
visit my country. Yes.
Bravo, cool.
And I was contact with one of my uncle. He's expert about this sector, and he give me some idea, and it's impressed me. Like if I can invest in proper place and proper way, I can earn very good money without
Yes.
without doing any job or anything.
Yes, without risking
So,
your life, and
That's impressed me.
don't trade your time cheap,
Yeah.
my friends, because you deserve more. We're living in a
Yeah.
very difficult times, and get out from the slavery.
Today I'm also coming one place for real estate shopping to see the place.
Make a promise to yourself.
It's another city.
You will visit 100 properties in 1 month, and then we talk, okay?
Yeah. I will try my best.
Thank you, guys. I'm hoping I can help someone.
Yeah, thank you.
Stay safe where you are. Bye.